Julie, with all the excitement and new highs almost being attained in Western markets, we've sort of forgotten about India somewhat, but back on the front page again this morning after a rate cut. Why has the central bank cut today?
Well, rates have come down a bit, so it's given them a bit more room inflation's come down a bit, so it's given them a bit more room to ease. The last cut was back in April last year, but this one was a bit smaller, so just 25 basis points. Last time it was 50. The trouble is that the hope is that this will boost investment and therefore support growth, but it's not really interest rates that are curbing investment, it's more the overall investment climate, which has been the main problem really for the growth lately.
And apart from inflation, I mean, just how much has growth moderated? Is it a big problem?
Well, growth for this year ending in March, which is their financial year, is probably going to come in about 5.5%. So obviously big compared with Europe, but it's actually the lowest in 10 years for India. So yes, growth has come down quite significantly. And
we also know that the finance minister is doing the rounds at the moment trying to convince those of us in the West that India is finally grappling its sort of bureaucracy. What's happening on government spending?
Well, this is it. So yes, the finance minister is on a charm offensive at the moment, trying to say to investors, look, we are serious about reform and we are serious about fiscal consolidation to bring down the deficit. The budget is going to come up in February, and the hope is that they will be pushing for fiscal consolidation. And equities tend to move inversely with government spending, so that should be a good thing. The problem will be in reality is, he might say these things, but can he actually put them into action? And that's what investors will need to see.
Okay, so we've got a fall in rates, which is nominally positive for equities. Inflation moderating, which let's call it neutral for the sake of the argument. Perhaps a little bit of restructuring from the government. How might an outside investor play this rate cut or a more bullish stance on India in general?
Well, this should be good for equities, but the trouble is a lot of this has already been priced in. So the market, if you look at the Sensex benchmark, has been up about 20% over the past year. So based on a lot of this hype. And the trouble is, I think we'll need to see results before that really goes any higher.
Do you get any sense now that Western investors seem to have moved on from China, that they're trying to drum up India as the next big thing?
I think there's definitely a sense of that. I mean, India, Japan also on the radar as a result of China slowing, even though relatively it'll still be growing faster. But certainly I think a bit of the hype around China has probably helped places like India.
Well, we know from some of the work we've done on return on invested capital, for instance, that Indian companies still have a lot of catching up to do from their Western competitors, but we will monitor that closely. Thank you very much.